Good morning, everyone, and welcome to our DAT IQ Weekly Market Update. This is our update for March 1st, if you can believe it. We made it. We made it out of February unscathed. Hard to believe. I'm Ken Adamo, Chief of Analytics here at DAT, broadcasting live from some kind of bunker situation, but actually the first floor conference room of our Denver office, as construction is happening upstairs. I'm Chief of Analytics here at DAT, joined as always by Dean Croak, who's back from the Spanish Regatta. Have him back so that Ned and I don't have to fill time. Speaking of Ned Damon, who's our principal data scientist. And then I'm extremely excited to welcome Nicole Glenn.
Hi, guys.
Expedite. As a 7-year Expedite veteran, I was looking forward to this show on the calendar for a long time. So welcome, Nicole.
Welcome, Nicole. Guys. Thank you.
So for those not familiar, we're here every Tuesday at 10 a.m. Eastern, talking about trends in the freight market, what we're seeing, but most importantly, answering your questions. And as I mentioned, Nicole's here. I'm going to ask her to introduce herself in a minute. But any questions that you have around smaller equipment types, expedites, hot shots, please get them in the chat below. These questions come up every single week, and we finally have a real expert here to talk about it, which we're very excited about. But I anticipate a lot of questions, so get them in early. Chat and comment section below, Facebook, LinkedIn, and YouTube. Our marketing folks will get them over to us to get over to Nicole. So, Nicole, do you mind just doing a quick intro of you and Candor Expedite?
Yeah, of course. So I'd like to say, an industry veteran. I've been in the industry since 2000. So I have going on 22 years under my belt, and I've loved the expedited side of the world. So chaotic fun, as everybody knows. And in 2017, I got to start really my dream and open Candor Expedite, which is focused to help our clients get to their commitments. So we align them with time-sensitive solutions from one pallet all the way up to a tractor trailer, time-sensitive.
What's the background of the name before we get into the show?
Oh, well, that's my favorite part. So being in the industry for so long, we've all heard and seen that it could be kind of not truthful. It can mislead people, right?
No.
So I wanted to start something that was focused on being completely truthful and honesty, and carry that transparency through the marketplace. Right. And so we've really moved our core values around the concept of bringing out truth and transparency in logistics.
That is awesome. So we'll come back to you at the end for our questions and our Ask IQ topic. But for right now, I'm going to jump into our key points of the week. And I apologize for looking away from the camera, but this is where the text is. So driving and reefer spot rates dropped for the 6th week in a row. Again, I saw some things on LinkedIn wondering if we were going crazy. It is definitely possible for rates to decline sequentially and still be up year over year. That is just how things work, right? You could say it was colder yesterday than today, but it was still a lot warmer than last year, right? So we'll try to be clear when we're talking about the time frame. ATA truckload tonnage index up 1.2% year over year, and that's pretty flat given some of that seasonal adjustment and whatnot. Retail sales up. West Coast port congestion is starting to ease, but what's interesting is we're starting to see a lot of chatter about East Coast, which I'm sure Dean's going to cover in his update. And with that, I will turn it over to Dean for the long-awaited return of our premier market analyst.
Thank you, Ken. Great to be back with everybody after the break. We'll do a quick market update this week so we can get to Nicole's session at the back end of the show. As always, the long-form version of the weekly update is available on Wednesday evenings at dat.com/market update. So let's dive into some of the load-to-truck ratio data, starting off with dry van. Volumes are down for the 3rd week in a row on our load boards. About 30% lower than the previous year, but to put that into context, this was the week after the polar vortex, so that's when the markets were reacting to the demand crunch that we experienced during that cold weather. Load post volumes are still double where they were this time in 2018. Carrier posts have been relatively flat over the last 3 weeks, so the load-to-truck ratio decreased 7% last week, not a big drop, down to 6.54. Having a look at the refrigerated market, it continues to loosen rapidly, more so than dry van. Load post volumes are down 4% last week, down 16% in the last 4 weeks. Still higher than last year, though, given the impact of the polar vortex, as we covered earlier. An increase in carrier posts last week due to the loosening of capacity. The load-to-truck ratio decreased to 11.63 loads per truck. And in flatbed, volumes continue to surge, broke through the 3 million load post mark for the first time ever. Volumes were up 8% last week. Flatbed market continues to track very closely with 2018 and 2021, as you can see from the chart. Load truck ratio is edging back to that 100 mark recorded in the second quarter of last year and in 2018. Last week it ended at 97.34. Having a look at our market condition index, a couple of markets worth noting. Cold weather impacted the upper Midwest this week. Definite signs the market's cooling though overall. Our loads moved within our DAT network were down about 1% week over week in dry vans. Weather was a big impact in the Colorado markets of Grand Junction and Denver. They had some record cold out there. Snow pounded the market. Travel across the I-70 through the Rockies was treacherous. Lots of avalanche warnings. So Denver had one of its coldest high temperatures on record, beat a 109-year-old record. So capacity tightened last week as a result. After averaging about $1.35 outbound loads for all of last year, spot rates jumped last week to $1.90 per mile. So quite a big jump there as capacity tightened. The other lane that we've been tracking every week for the last 18 months is Los Angeles to Chicago. That's been a big import-driven market. It's also a lane where truckload competes with intermodal fairly heavily. Rates plummeted last week to an average of $2.48. Why is that significant? That's still 53 cents a mile higher year over year, but it's a long way south of the high of $3.28 per mile recorded last December. So capacity is loosening as import volumes start to drop. And as Ken mentioned, we're down in the high 50s now in terms of vessels waiting at anchor, down from 109 back on January 9. In refrigerated, as we touched on earlier, the upper Midwest was very tight capacity this week for refrigerated trailers. I suspect a lot of that's got to do with the Protect from Freeze that's added to bills of lading. February ended up about 6 degrees colder in the upper Midwest, so that's had an impact on truckload capacity. Dry van rates in this region have increased only 4 cents a mile, while reefers increased by double that last week. It's about $4 a mile for outbound loads of refrigerated trucks out of the upper Midwest. That's about $1 a mile higher than the national average. So still very tight capacity for the last 2 weeks. Even loads potatoes out of the Red River Valley, capacity is very tight there. It was the only region out of 21 major produce growing regions that reported a shortage of trucks last week. And another sign that capacity is loosening in the refrigerated market, one of the lanes we've been watching closely is Los Angeles to Las Vegas. Last week, the average spot rate was $3.13. Out of Los Angeles, that's down 30 cents in the last month. And on that one particular lane to Las Vegas, after averaging well north of $6 a mile for the last 4 months, that's line haul rates, reefer rates for loads from Los Angeles to Las Vegas dropped to $4.92 last week, down about $1.12 per mile. And in flatbed, capacity was very tight in San Diego and the Ontario market just outside of Los Angeles last week. Spot rates are up 17 cents a mile to an average of $2.95. San Diego to Portland was $2.97. That's almost $1 a mile higher than the same week last year. Capacity was also very tight on the Gulf Coast in New Orleans. Spot rates jumped 52 cents a mile last week to an average outbound rate of $3.35. New Orleans to Houston up 26 cents a mile last week to an average of $2.86. And wrapping up with our year-over-year look at spot rates, capacity continues to loosen in the dry van market. Rates are now down for the 6th week in a row, following last week's 3 cents per mile decrease. The national average ended the week at $2.65, still 35 cents a mile higher than the previous year and about 85 cents a mile higher than the same week in 2018. And in the refrigerated market, as we mentioned, rates have been plunging for the last few weeks. Again, seasonally, no big surprise before we get into produce season. Rates are down 13 cents a mile in the last month. Last week they ended at $2.98. That's the first time they've been under $3 a mile line haul since December last year, and still 42 cents a mile higher than this time last year. And lastly, in flatbed national average spot rates ended the week at $2.68 last week. That's just 6 cents per mile shy of the record $2.75 per mile recorded in June last year. They were up 4 cents a mile last week, up 4 cents a mile in the last 4 weeks, and about 37 cents a mile higher than the previous period last year. So that's it for our market update. Remember, if you need to read the long form version and get all the charts and graphs, go to dat.com/market update and download our weekly report. Over to you, Ned, for the short-term forecast.
Hi, everybody. We're going to be starting by looking at dry van forecasts. In blue, you can see the market average observed by DAT. And then off to the right, you can see our forecast models. In red, the short-term model is having a little bit of a panic attack, expecting rates to be dropping by about 10 cents over the next month. In green, our ratecast model, which has a stronger seasonal adjustment and more historical priors, is expecting rates to stay at about current level with maybe a little bit of uptick of a penny or two by the end of next month. Our blended forecasts in gold and silver are mixtures of these two forecasts in different amounts and in different ways. They're expecting a more steady, stable decline, dropping by about 5 cents over the course of the next month. I am kind of partial to the blended forecast, or maybe somewhere between the blended forecast and ratecast here. But I expect that the short-term model is maybe a little bit alarmist. Speaking of alarmist models, now we're moving into the reefer space. Once again, you can see the blue line showing the market average observed by DAT. And then off to the right, you can see our forecast models. The short-term model here has gone absolutely ballistic, expecting rates to be dropping by, if I'm reading that right, 30 cents a mile over the next month. If that happens, I'd be really surprised. The ratecast model in green is expecting rates to maintain about current level, maybe raising by about 3 or so cents as we head into the end of March, whereas our blended forecast in gold and silver are mixtures of the two models in different amounts and in different ways. They're looking a little bit more realistic, even though I think they're a little bit on the pessimistic side of things. Finally, we're moving into flatbed, where we have more model disagreement, but I feel overall a less dramatic picture. Once again, in blue, we can see the market rates observed by DAT. Off to the right, in red, you can see our short-term model is projecting a relatively small slide, maybe about 4 cents-ish over the next month. In green, our ratecast model is, in my opinion, slightly too optimistic, expecting a rise of 7 cents over the next month, with rates staying more or less stable for the next couple of weeks. And then as we head into the later part of August, a pretty rapid growth. The blended forecast in gold and silver are mixtures of those two models in different amounts and in different ways. They are, I think, a little more realistic, with rates maintaining about the same level until we head into the later part of August. And with that, it is time for the IQ question of the week. Ken, take it away.
I will do that. Thank you, Ned. So is it a good time to enter the box truck freight market? So with that, I will bring out our closer from the bullpen here, Nicole.
Yeah. I would definitely say yes. This is a market that is needing capacity in certain marketplaces. We are seeing more and more requests for straight trucks. So one of the great things about what's going on right now with the good of the industry is that customers and clients are starting to open up more. They're starting to listen to different solutions, because we did get that great market forecast from Dean, but we're still seeing in some places $7, $8 a mile on the spot board, right? So clients are looking at alternative options that they can do, getting crafty and creative with the straight truck and the Sprinter van model. So I would definitely say yes to that. There is such a need for additional capacity, even in those equipment type spaces.
So talk to us, if you're a shipper and you're struggling with your core carrier list, can you talk to us, from a carrier perspective, where the opportunity might lie specifically, right? So like how to approach a shipper, how to talk to them about some of these alternative methods to get freight moved?
Well, it's really having that consultative approach, so understanding how a shipper goes to market with a tractor trailer marketplace, and what are those alternative things that they can do, asking the questions about really when do they need to get product delivered? Are they willing to ship short? Can they actually hold some of their LTL freight a little bit longer and create that straight truck or Sprinter van move? So I like to approach it as understanding and really hosting a call with them in person as well, to really go through some of those checkpoint questions that we have, trying to understand what is really needed. Is if it's inbound, understanding their inventory requirements and how they're going to run things through production. And so really creating that checklist of of things that you can offer on the solution side, and just asking simply. You're also going to get like a bite back on some things, right? Some shippers are really set in their methods. They might have been in business for years upon years. And so even if they say no on some things, pose it again. I've had some relationships where I'm going, are you sure you don't want to look into this? Are you sure you don't want to talk about it? And so after time, I'm not trying to wear someone down, but it's just getting them out of that standard way of thinking to really put those solutions out there and craft a solution that could be viable for them. Some of those solutions, though, are great for short term. And then some might actually change the way that they go to business with buying equipment and how they're going to load different trucks, in the future.
That makes sense. So are you seeing a lot of spillover from LTL, right? We've heard over and over again how from both the shipper and we've had LTL carriers on the show. Those networks are just slammed right now, especially for what they would consider volume shipments, things over 8,000 to 10,000 pounds. Are you seeing that spill over into the box truck and even Sprinter van?
We are often. And then we're also seeing recoveries. So freight might move on the line haul and then get stuck in a location. They might not have a driver to do that local route or even that regional route on a timely manner. So we'll go in and recover that from an LTL line. Or like I said, clients are coming to us just, hey, we can't move this, or they don't have capacity. And then we also saw too that some of the LTL lines have pushed away some of their clients saying, hey, we're no longer going to be working with you. So that smaller mid-sized shipper felt that from some of the large LTL lines.
Right. I mean, that's a really good point. I mean, if you can, right now with where LTL capacity is and where some of the pricing is, I mean, you can, what you call like a zone skip and go direct, and it reduces damage potential, right? I mean, when you're handling the freight a lot less, there's less potential for delays or missing a service commitment. And I mean, I can't imagine you can't really put a price on not moving the freight at the moment.
Exactly. And so we're seeing that, but then we're also seeing clients that normally go through their normal routing guide. So they may move 4 or 5 skids on a tractor trailer, and that routing guide, the price, all of that freight went to spot. And so we're trying to pose that solution to them as, I know it's your normal route, but at the same time, you can take that because it won't make it on an LTL line.
Right.
And you'll get that dedicated service. And I think that's the part that a lot of companies are liking is there are no damages. Like our claim ratio is 0. Like we don't ever have them unless something catastrophic happens, so you're loading that and running it direct. So their clients are getting impeccable service. Like you're showing up, you're calling, you're keeping all that freight updated, and it's just totally different than the standard truckload market or even the LTL market.
And you have, Expedite is known to have visibility, kind of pick up the delivery and all their shipment. I mean, it's just that extra handling you get over, some 18-year-old jabroni with a forklift kind of smashing your freight into the wall at an LTL terminal.
Right.
It's totally different on the transparency side. So when we were with a tracking partner, we had a 97% threshold, which is work, guys. So I know everyone's listening. Please get on your tracking threshold. You will reduce the amount of calls you get. But even getting that done is a challenge to get drivers on that. But again, you're 97% of the time getting that breadcrumb trail throughout pickup through delivery. And it's just amazing for some companies because then they know what their next move is when that freight arrives, what to do with it.
Right.
So this question came in earlier in the week, and I don't want to get too far in the weeds, but have you seen, so when the federal excise tax changed, a lot of box truck or what you call straight truck remove their tag axle to reduce their weight. Have you seen that rectify a little bit, or are you still seeing, what would you say is like an average weight that you're hauling on a typical 22 or 28 foot box truck?
Well, we don't really get a lot of 10,000 pound shipments, believe it or not. We're seeing a lot of like 8,800, 6,600. We do have carriers that are willing to do the 9,800 pounds, but it's funny that we don't really see a lot of that. We're helping a lot of medical moves, so you're not moving paper and really these heavyweight commodities for the most part. It's going to be something more lighter for the most part is what we see with our client base. But I'm sure everybody has different customers, so they may see something totally different.
Right. Nicole, just on the equipment side, while we're talking about configurations, one of the questions we often get asked is, should I put a liftgate on a truck? What's the advantage? Do I attract a premium, or is it sort of just table stakes that are in that box truck market to have a liftgate?
Well, I think it's really what you want to do with your customer base.
Mm-hmm.
So there's some carriers that don't really have the drivers that would like to do the inside delivery and deal with all of that store deliveries. Right. I mean, if you're just going, B2B, dock to dock, distribution to distribution, not necessary.
Right.
But if you want to step into that, retail space, or maybe more of a high niche type of volume where you're delivering medical equipment, again, you're going to have extra insurance. You're going to have drivers touching freight. You might have claims that you don't necessarily have with a liftgate. So it really depends on your business model. For us, I mean, we are moving a lot of liftgate freight. Doing the whole inside 2 men is a big concept too. I mean, we all see it. It's really hard to get teams.
Right.
But those are really the spots that if you're going to step into, it's really necessary to have that.
Got it. Thank you.
Teams was another thing that came up just in talking with viewers this week. I mean, what are you seeing as kind of a typical team premium at the moment?
For a straight truck?
Yeah, I mean, we can talk in generalities like percentages. It's probably best we don't talk in like actual rates from an anti-truck perspective.
I was like, it's going to depend on where you're going to.
Yeah.
Well, I mean, we all know this industry is a lot of teams, so it's really understanding how many of those are in existence. So we see quite a bit of team request. And when we do, we have a process at our company that we actually call both drivers, a handoff of the phone. And you'd be surprised how many times it's really a solo driver.
I wouldn't be surprised at all.
You have to rebook that load. So that's one of the things I do want to tell my broker friends, get on the phones with both drivers to ensure that they are a true team. But we do get quite a bit of request. And when you're in the straight truck world, it's necessary. Mm-hmm. Obviously, in the Sprinter van world, it's not as necessary to have. But I mean, we are also seeing true Sprinter van teams to keep those wheels moving. So,
yeah, when I was leaving the expedite industry, right, a lot of that Sprinter van freight was centered around the big three, tier 1, 2, 3 suppliers in the Midwest, and those runs were generally shorter. As the auto kind of ecosystem moved into the Southeast with all the Euro and Japanese manufacturers setting up shop down there, the runs became longer, so you did need maybe perhaps teams in those Sprinter vans to handle those longer moves.
Well, it was very crazy when the port was all locked up. Yeah. We were having clients bring freight into the East Coast, and they needed it on the West Coast. So they were trying to avoid that port, and then we were trucking all the way back.
A 2,000-mile dray move.
Yes. They'd break it down, but then we would be moving it completely across the country to get it back to where they needed that product and on the West Coast.
We were seeing dray moves from Baltimore to Buffalo and Milwaukee, like true dray moves. It's still in the container. Yeah, it was just wild there for the longest time because they were trying to skip having to go into LA and sit there.
Right.
So last question before we get to the viewer questions. What's the craziest thing you've moved in expedite that you can talk about?
Ooh. Well, I moved a person that died.
Oh.
Yeah.
That's pretty crazy.
That was a little crazy. So, and that was when I was on the asset side. So I knew the driver personally that had to do that. So it was actually humbling because you're helping someone get their family member back that was from overseas. But at the same time, it was different to do something like that.
We had a father-son team that was doing a cross-border move, and the father died while they were in Canada. And like untangling that mess was crazy.
Yep.
But mine was a polar bear.
Oh.
We had to move a polar bear in a reefer truck. We
got to do a really cool telescope. So one of the major telescopes that was in the Chicago area, we got to bring that in. So that was super exciting. The whole thing was video. There were crews, obviously a high value move. And it was really exciting to see them bring that in and then get to see them put that together. So it's kind of cool.
See, Andrew Raleigh said this just got real morbid. He used to work at FedEx. He knows about moving the polar bears and the turtles and the king tuts. Yeah, there's the more positive. I mean, King Tut died thousands of years ago. That was technically moving a body, but it was just really, really old.
Right.
That would be really cool, I think.
Yeah,
History is moving.
We, a good friend of mine from FedEx had to accompany some ancient Jewish scroll back over to Israel, I think it was, and like had to fly alongside with it and had it in his possession the whole time. So some of these things that we've got to see. I love the expedite industry, whether it's like, seeing a monster truck outside of our national sales conference down in Florida, like because that we were supporting the Monster Jam thing. It's just always you never knew what you were going to get into. It wasn't just boring, pallets of paper or loose tires. It was always something fun that you were getting to kind of get your hands on.
Yeah. I see a lot of medical equipment, stuff like that. So I know that it's helping people though. So that's a really cool side of it.
Yeah, I remember when the hepatitis thing came out, right? That when they created a vaccine, was it for hepatitis? We were removing a lot of that. It was just like, holy cow. And like the people that like work on the front lines of this stuff are just remarkable. Like these dispatchers are, again, just moving commoditized freight. It's like when you got life-saving pharmaceuticals back there, it's pretty damn important that you get the set point right on your reefer unit.
Right.
You don't have a margin for error. And what these people do is just, and the professional drivers on the front end too. I mean, they take an immense amount of pride in what's back there and making sure it gets there safely and intact. All right, let's move to Dean. I think Ned's having some trouble. I see him frozen with his eyes closed.
Okay.
Dean, you want to read our questions? Because I can't see him on this iPad thing.
Yeah, one of the questions we've been getting about was cross-border freight, and I'll just quickly find it here. It came from Robert Hayes. Robert asks, he's asking if we can get our crystal ball out, which we're pretty good at. US, the Canada cross-border capacity, any idea when we can expect capacity and rates to at least return to Q4 levels? While Nicole was talking, I quickly looked at the couple of lanes that I've been tracking. Robert, doesn't look like anytime soon. Detroit to Toronto spot rates are up to 1,083 per load after averaging about 650 all of last year. Similar effect on the Auto Alley out of Laredo, with all of the imports coming in from Mexico. Those rates are still high. I thought they might have tapered off a little bit, but they're up around $2.68 a mile after averaging about $1.50 a mile all of last year. So they've gone up in the last 6 weeks since all the trouble started. Robert, it's going to take a few weeks for that network to restabilize itself with the dedicated capacity getting back into the US to haul those loads back north across the border. So I think it'll be another few weeks before we see any signs that might be stabilizing. And I'll go to the next question, Ken, or did you want to add some color to that?
No, I mean, I think rates are finally starting to behave how we expected, and it'll be interesting. Do you have any insight? I mean, do you do much cross-border, Nicole? I mean, I don't know.
We do. We get quite a few requests for it, but like everybody else is seeing, it has been a struggle for us. So we've had a lot of our customers come to us with tractor trailer requests the past couple of weeks and literally saying, I don't care what it costs. And really finding just the capacity that would even do it was a struggle.
Right. Yeah, there's some of my friends that come from Canada are slowly starting to get back on the road, and I see on Instagram their pictures are deep in the US now. So after saying they wouldn't come across the border, I see some of them back. So I think it'll take a while for that capacity to come back. Nerman Taramovic asked another question, Ken, will rates go up in spring? So I guess we're talking about dry van and reefer rates. Maybe we just talk generally about that. Seasonally, yes, they do go up in the spring. But I think we'll be going up in spring from a much higher base compared to this time last year. That's for sure.
I think that's right. Right. So yeah, you'll have the produce bump.
Yep.
You'll have people shipping all their patio furniture and grills and whatnot all around. So I mean, I think that'll put some upward pressure on rates. I don't know how much it'll affect like the long-term trend. I think we'll see some noise around that long-term trend, but it seems like things want to start cresting down, cresting and ebbing back on the spot market. Right. We're just seeing such a pronounced increase in contract volumes and contract rates that it would make sense that we'll see some downward pressure on spot this year. But we'll see.
Nicole, anything to add on that? What do you normally see seasonally as you get into spring and summer?
We really follow the truckload market. Right. So, as we see the truckload volumes, tick up, we see those markets come into play then on the expedited side. So
Right.
say, for example, when produce starts going, I know it sounds funny, but it just sucks up that capacity that normally maybe even does a distribution pool.
Right.
And then we see an uptick with that as well.
Yeah. This question for you, Nicole. Vaughan Clark asks, where would you suggest to get drivers besides Indeed?
Well, I'm actually a brokerage firm, but I have been on the fleet side. Believe it or not, we used to plant people at truck stops.
Right.
So you're gonna have to get a little crafty. I mean, everybody's looking for drivers. There are some great sourcing companies too that really go out there, try to hire, and then manage the drivers for you. So that is a great thing too. When I throw my contact information out, you can reach out to me, and I'd be more than happy to connect you with some of those.
Sure.
But really getting crafty with that, going to truck stops, going to fairs. When you guys see some of these expedited fairs, or you see anything in regards to truckloads, drivers do go to those. Drivers do want to understand what's going on with equipment, new technology. So that could be a great recruiting spot for yourself. But continually going through those online applications is a big thing too. It's part of it.
The other area I think is a great opportunity is truck shows. Truck show season starts on the 24th of March at Mid-America Truck Show in Louisville. We'll be there with showing trucks and with a big booth. So that's where I find a lot of good contacts because the drivers that are going to truck shows are, the true enthusiasts. They're the guys looking to turn a job into a career in particular. The industry doesn't do a great job at that, turning, a job into a career. There's a big gap between those two job distinctions, but there's at truck shows you'll generally find the really good career prospects. That would be my best tip for Vaughan.
There are also a lot of truck drivers on social media.
Yeah.
So Facebook is a big place for drivers. There's a lot of groups that you can join that support drivers. So you can go on there and try to start your recruiting on different social media platforms as well.
Right. And Ken, the last question, Minato Namikaze asks, which states can I find the best power-only loads in?
Think of big warehousing centers, right? So Southern California, like the warehouse alley. I did that show, I covered for Dean last week, and it was a brilliant, just a great discussion about that whole, if you draw like a big area around Memphis up to Louisville, Nashville, Chattanooga, that whole area, right? All those warehouse. I mean, so you're going to have a lot of power only synonymous with drop trailers. So where people are going to be demanding drop trailers, even like Denver, Sparks, Reno, Nevada is a big area. So look for where there's big concentrations of distribution centers and warehouses. That's usually where you're going to see the big power only demand. Huge. I mean, you talk with a lot of brokers right now, and 5 years ago, power only was this niche boutique thing, and now nearly every big bid they're asked to participate in has a drop trailer requirement. So,
Right.
Yeah.
All right.
So plug time. Nicole, you want to tell people how they can get a hold of you and Candor Expedite?
Sure. So we're always looking to add wonderful relationships to our company, whether that's a carrier or a client, or even some brokerage firms that just need expedited help because it is a specialty type of service. We can be reached at operations@candorexp.com. And then you can also give us a call at 630-480-6798. And then we are all over social media. Feel free to reach out to myself, even on LinkedIn. Very active, checking messages there all the time. Would love to connect you to the right people within our company.
Great.
What other, Dean, you want to run through the plugs? I'm limited on what I can see here.
Yeah, we've got, we'll be on Landline Now tomorrow night at 7 p.m. Eastern. Road Dog 146 on Sirius. We'll be on Radio Nemo with Jimmy Mack on Thursday morning at 8 a.m. Eastern. Of course, we've got Mid-America Truck Show coming up the 24th. We've got a big booth there. There'll be lots happening. We're sponsoring the Friday night entertainment with a country and western singer. Is it Clay Walker, Ken?
Clay Walker, from what I understand.
Oh,
yeah.
Throwback. Okay, good.
Going to be quite the night.
We couldn't. The business isn't lucrative enough to land like a George Strait or Garth Brooks.
Well, good luck with
Clay
that.
Walker. That's my wheelhouse of country music singers.
And Freight finds out next week. Don't miss that one. That's with Paul Bingham from IHS Market.
Right. We got the TPP show going on right now in
Yep.
Long Beach. Will you be at Matt's, Nicole?
Will I be where? I'm sorry?
At Matt's Mid-American Truck Show?
No, I will not this year.
All right. All right. Well, I want to thank you for joining us. We'll have to make this kind of a recurring thing, maybe quarterly. I love this kind of non-truckload
I would love to.
Yeah,
Yeah,
thanks,
it's
Nicole.
been awesome.
Yeah.
Anytime we can get more Expedite on the show, that would be.
And that's what I do want to tell people too, is if they have any questions, please look me up. It's just Nicole Glenn on LinkedIn. I'd be more than happy to help you with anything that you guys need.
Okay.
Awesome.
Thank
Well,
you.
thanks everyone for joining. Thank you, Nicole, for joining us. And we will see you next Tuesday at 10 a.m. Eastern. Goodbye,
Yep.
everyone.
Bye.
Bye-bye.
Bye.